Good afternoon and warm welcome everyone who has joined us today. My name is Professor PIYUSH TIWARI from Architecture, Building and Planning. Before we begin, I would like to acknowledge the country. I would like to acknowledge the traditional owners of the land I'm on today, the Wurundjeri people, as well as the traditional owners of land you are situated on, and acknowledge that Indigenous Australians have been custodians of land and waterways of Australia for thousands of years. I pay my respect to their elders, past, present, and emerging. As part of our State of Industry webinar, we'll discuss today residential property of the future. Few housekeeping things. We had quite a big response to our current event. We have a number of participants who are joining us. So please do send us your questions and we'll try to take them on board as we discuss. However, my apologies in advance if we are not able to take all the questions, given the number of questions that we can expect in this event. We have a very strong panel today who will be discussing the topic of residential property in Australia as well as in Melbourne. We are joined by NERIDA CONISBEE. She is Chief Economist for REA Group and is leading property expert in Australia. She is the most qualified property commentators in Australia and is most quoted as well. NERIDA is columnist with Australian and Mansion magazine. She appears every Saturday on Sky News and is a regular commentator on Channel 7 Sunrise. Welcome, NERIDA.
Thanks for having me.
We also have Paul LOWE, who is sales and marketing strategist with Land Lease, and he brings unique balance of market insight, operational expertise, and commercial acumen. He specializes in mixed use, high to medium density inner city projects and master plan community greenfield estates. Welcome, Paul.
Good afternoon.
We have Mark Dawson. He is director at Urbis and specializes in housing. His extensive career has been around many countries, including the UK and Australia. He's also an expert on build to rent, an emerging asset class that we would see in coming years in Australia. Welcome, Mark.
Thank you.
So without further ado, I would like to go straight to NERIDA and ask a question on economy to set the stage. Now that we have seen 2 quarters of economic results, the second quarter of economic outcome, as we all know, was delivered during the lockdown, but with strong government stimulus. Where is the Australian economy now? And what do you think is the outlook for the rest of the year and the year to come?
Well, it's, no doubt we're in recession. We've got rising unemployment. We're in a pandemic. It's a pretty gloomy outlook. I guess the thing that is quite interesting about this recession is that it's highly unusual. It's very different to what we've experienced in the early 90s, very different to what happened in the global financial crisis in Australia. And the prime difference is that it is a productivity crisis, it's not a financial crisis. So we've gone into this with a solid banking system. It does seem to be playing quite a different, it's leading to quite different conditions in property markets than we otherwise would expect. And also that right now, we can see that unemployment is highly skewed to young people. And so this is again leading to some quite different dynamics in the economy. The outlook is highly uncertain. I think, in June, when we were having a look at a lot of economic data, we saw this sharp rebound in retail trade. Certainly on realestate.com.au, we saw this the buyer activity really surge back. Seller activity was surging back. There was lots and lots of positivity. And then, of course, Melbourne started to see this rapid rise in infections. And then before we knew it, we were suddenly in lockdown. So, I think at the moment, we can see WA is doing pretty well. Iron ore is at a record price. We've had record iron ore exports. BHP recorded some pretty solid numbers. Canberra is doing really well. It's a government town. The future is big government, so that's quite different. But then of course we've got Melbourne now in lockdown. So it's activity has really just stopped, and we still don't know exactly how Melbourne will come out of lockdown. But ideally it will be quite positive once we hit mid-September and everyone can start to slowly get back to more normal conditions.
Right. Thank you very much. And thank you, NERIDA. Paul, can I ask you a related question on the sectoral? Like construction industry has been severely hit. Do you think categorizing the industry as essential services will lift the sector out of gloom and doom?
Yeah, it's a good question. Look, from an industry perspective, I think it's key. We are the third largest industry segment in the country, and currently employs approximately 9.6% of the workforce. Probably delivers in an ordinary time about 360 billion. That's about 9% of GDP, and of course it's key to underpinning jobs and prosperity. So therefore, to keep the industry going at some level is absolutely imperative. And I note that the ABS has just come out with some preliminary June quarter numbers. Of course, they look at the value of work across the total construction industry. It's currently down 0.7% on quarter, but interesting enough, when you dig into it at a resi level, it's down 5.5% for the quarter, and year on year it's down 12.1% on those preliminary numbers. So you'd have to say that, you know, we would need as best support we can get from government, and certainly the industry bodies are all lobbying to maintain some level of activity, and of course engaging the workforce and continuing key projects. So it's extremely important.
Right, right. Are there green shoots appearing for the construction industry with the recent announcements related to infrastructure spend, social housing, home builders grant? Would they have an impact on the construction as well as the economy, do you think?
Absolutely. Look, government stimulus is essential, and I think we've noted that in past time where there has been a crisis at an economic level. And I also note that I saw an article come out in the Sun Herald, mainly from a Victorian perspective, on the 24th of the month. A Road to Revival was the key headline, and it mapped out our economic recovery plan. And key to that is of course the government spend and support, mainly on the infrastructure side, but certainly social housing is a key topic. And I think we can see and all understand the social impacts of this pandemic. What I do note is that in that Road to Revival article, I've given a couple of key facts. It's very focused in the north and the west, in Melbourne, predominantly in the Greater Melbourne area, which spans about 13 council areas. The expectation is that there'll be about 66 major projects, and will underpin about 300,000 new jobs in the next decade, and also population, which is key to any growth. We can note there that they're expecting in the next 2 decades that 1 in 12 Australians will live in this area. And if you took that and analysed it, you'd work out that's more than the whole of South Australia. So it's absolutely critical, the support in infrastructure and key projects. And I know obviously state government, but certainly at the federal level too, they're doing as much as they can to support, I guess, key economic activity and drivers to come out of this, which is really important.
Yeah. Thank you very much, Paul. NERIDA, how has the outlook for housing market changed since March in Melbourne?
So, I mean, it's interesting that those first 2 weeks of lockdown in March, it was a pretty shocking time for us looking, I mean, it's a pretty shocking time for everyone, obviously, but from a data perspective, we saw this massive decline in search activity. And, you know, it was kind of like, well, yeah, we expected it. But what was surprising is that once that third stimulus package was announced, we did see this rapid uptick in terms of search. So, that seems, JobKeeper, job seeker in particular did seem to lead to, far more buyer conditions. So buyers came back quite quickly, and we started to see sellers come back quite quickly. The market, though, that got hit the worst, or has been hit the worst, is the rental market, and it is primarily because job loss has been primarily amongst young people. It's hit sectors such as education. Foreign students couldn't come back. It's hit hospitality, tourism, and as a result, rental. And then we also had Airbnb listings converting to long term. So there was all these dynamics that were occurring in the market, which led to a lot of weakness on the demand side, and then an uptick in listings as well. So since that time, buyer activity, seller activity has been fairly robust. We can see that people are very focused on premium suburbs in Melbourne. So, I always use TIWARI as a bit of a bellwether in terms of how popular that is on our site. And typically, TIWARI will be, ranked sort of 40th in terms of views per listing on realestate.com.au, but currently it's ranked about 3rd. So, what we're seeing at the moment is that when people are searching for property, they are very focused on premium markets, and that does seem to be flowing through to pricing. So, very low interest rates, relative job stability at this stage, at least, in terms of white collar employment, and some industries doing quite well. That does seem to be supporting the top end of the market. What seems to be a real risk factor at the moment is CBD apartments, and anywhere exposed that have firstly had very, very high levels of development, and also highly exposed to students, and particularly foreign students. So when we have a look on what we've seen in terms of rental listings, we can see that the biggest jump since mid-March has been amongst apartments. It has been very concentrated. 10 suburbs in Australia have got 50% of those increases in rental listings, and a lot of those suburbs are in Melbourne. So Carlton, Clayton, South Bank, Docklands, Melbourne are all in that top 10. So what seems to then now be happening is that we are starting to see investors selling out of those markets. So on one hand, we can see that first home buyers are very active at the moment. They do have a lot of stimulus being given to them in terms of encouraging them back into the market. So, the various state government schemes, the 5% deposit scheme is really helping them, but investor activity is really low. Investors lack confidence. They seem to be trying to sell out, and as a result, there is a lot of issues in the CBD and in the Melbourne, particularly around apartments at the moment. So more broadly, I think this is a bigger issue for Melbourne CBD. It always has been such a vibrant and exciting part of Melbourne, and has really rapidly changed since Postcode 3000 was introduced in the early 90s. But now, it is a challenge. How do we get people back into the CBD, workers back into the CBD, and what do we do about this emerging rise in the vacancy rate? Since the lockdown, this second lockdown, we haven't seen buyer activity go off the cliffs in the same way that we saw in the first lockdown. So, I think one thing that is apparent is that Melburnians, obviously pretty miserable at the moment, but there is a recognition that at some stage this will end, and as a result, things will, hopefully get back to a more normal stage. If we have a look at what has happened to property markets in other cities where there's been very severe lockdowns, there has been in every case a very sharp rebound in activity. So if you go to New Zealand, if you have a look in New York, London, we have been tracking those markets pretty closely, and we can see that there is this pent-up demand that does take place during a lockdown, and there is this bounce back in activity. The longer term impacts around employment is really the biggest risk factor at this stage. But, with a lot of businesses, going through a period of zero income or very minimal income, there will be a lot of challenges across a lot of business types. And so, I think that's a big risk factor once we get out of this lockdown.
Right. There are a few questions coming in. Maybe we should take them as we go. One of them is on property values. So compared to February 2020, that is pre-COVID, what do you expect residential values for houses versus units to be in mid-2021 and then mid-2022 for Melbourne? Whether there would be a decline, increase in the median values, which areas do you think would be impacted, and what typologies of housing would fare in what way?
Yes, I'll answer. I suppose coming back to what I was saying before, it will be the unit market, and it will be those markets that were aimed at high volume markets. So, if you consider, I know there's a lot of people who are worried about house price declines, but also there's also a lot of people that would quite like house price declines. So I think, if you are looking for a house, prices to decline in a suburb like Albert Park or, Turak, as I mentioned before, or even sort of middle ring suburbs like Glen Waverley or, Box Hill, if you're looking for a house, a family home on a big block and you're hoping that prices will collapse, then they're unlikely to collapse. If we have a look though at, say, a one-bedroom apartment in Carlton, I think that's the biggest risk factor at the moment, and particularly if we don't get foreign students back in a hurry, even if local students don't go back to physical classes in a hurry, then those markets will continue to be a struggle, and as a result we'll start to see some declines. The other interesting area of strength is parts of regional Australia. So Geelong in particular, leading up to COVID, was an incredibly strong market, and that has continued to show a lot of strength. A lot of government investment has really helped that market. Ballarat, Bendigo are quite similar. If we have a look nationally, places like northern New South Wales, we can see places like Byron Bay, Bangalow doing really well. Southwestern WA is also doing well. So there is this shift to regional search, at least, and whether that leads to shift in regional population remains to be seen. But there's certainly this renewed interest in regional Australia, which which I certainly haven't seen in our search data since I've been with REA Group.
Right. Thank you, NERIDA. Mark, can I ask you a related question as NERIDA is talking about the shift in population? We have seen that there has also been a shift in migration, in the sense that Victoria, which used to get about 80K international net migration year on year, now it has reduced to 55,000 this year, and it's likely to go down further. So do you think that this is going to have an impact on the demand for housing and the capital inflows in the sector?
I think it very much has been plan A, hasn't it, for Australia's growth, and the real estate response has been relying on those headline demand numbers. And if you talk nationally about 60% of your overall demand coming from net overseas immigration, that has a big impact. Going from an average of 200,000 odd a year, dropping down potentially as low as 30,000 next year, assuming the borders are open enough to enable that. So, a big part of your growth has gone. So it drives a lot of change in the mindset of the industry, in the short term at least. And then the real question is, how does that flow through to the uptick in demand that you might get as things reopen? So if we assume that Australia as a whole continues to have a relatively positive response to managing the virus, obviously Victoria's had a tougher time of late, but the rest of the country seems to be in pretty good shape at this moment in time. Compare that to a number of other destinations for migration or investment. There's a bit of an upswoosh that has potential the other side. So, no question there are impacts in the short term, and that will drive a lot of reorientation of activity in the market and how we service more moderate growth domestic market, until such time we have greater clarity of how that wider growth responds and returns.
Right. There's a question from one of the participants. Do you think it's a pivotal point where we would see the market skew more towards owner-occupied rather than investor-led?
I think that's been happening anyway. And I'm sure Paul and NERIDA can talk to this as well. But we've done a lot of research around the apartment market at Irvis, and a few years ago there was a very strong international investment-driven market, and various policy changes both here and overseas have have had an impact on the extent of reliance on that. There's still been a very strong domestic investor market in property, whether that's local investors or interstate. But we've been seeing owner-occupiers creep up the activity list, if you like, and playing a more prominent role in providing new housing. And so I think as our cities need to accommodate more people, and we will continue to grow in Australia, and our cities will grow and change and go through a range of cycles. But how we deal with a range of densities and property types and tenure models is going to continue to broaden, in my view. And I think you'll get, in some instances, the benefit of home ownership in rental property, and in some instances you'll have more accessible home ownership from an affordability perspective or shared equity perspective even. And I think the focus will have to be in the short term on domestic owner-occupiers while the investor market is challenged.
Thank you very much. Thanks, Mark. And Paul, there is a question coming in that's about building design. So what impact do you think COVID will have on building design for new buildings? Will it lead to better housing standards, given that much time people have now spent at their homes?
Yeah, it's a space that I think all builders and developers are very focused on. The thing we are seeing out of this, and especially obviously residing here in Victoria with the stage 4 lockdown, is that clearly you're spending 24 hours a day predominantly in your home and in the confines of 4 walls if you're living in an apartment. And if you're lucky to have a backyard, then you're probably frequenting both. The work from home motto is very strong in relation to adaptable spaces. I think we've seen that there's only so long you can take from working from the kitchen bench or the dining room table, especially when you've got family who are having to do the same. So having adaptable spaces, having separate zones, and having I guess peace of mind and some sort of lifestyle, albeit one that's extremely restricted, is important. We're going to see from this disruption a number of innovative changes that will come to the fore in the construction game and of course building design. It does take time to evolve those, because it's not as simple as simply cooking cutting, I guess something that's unique today from existing 4 walls, but we will see that accelerate. I have noticed a lot more discussion around things that we take for granted, like for instance air quality, which is extremely important, yeah, and always has been, and probably less so maybe in Australia, where air quality is always considered to be very good in comparison to, say, our Asian counterparts and colleagues, where they've always struggled with this. Also, you know, depending where you live, if you live in an apartment and you've got shared amenity, then the question is, what does that shared amenity now look like in a COVID or even a post-COVID world? So hygiene and wellness becomes paramount. You know, things like touchless access, you know, so not having to touch lift buttons, being able to access a lift from the mobile phone, being able to use your foot maybe on a pedestal, which we've seen in some of the commercial environments, to call a lift. You know, being able to access things without actually having to touch it. How do you carve up, let's say, spaces that are not being used, like lap pools, for instance, which most large buildings tend to have? How do you, you know, readapt the concept of a residence lounge into, let's call it, smaller working areas where effectively it's working from home, but you know, you could use it like a sort of shared office environment. So there are a number of things that are going to take place, and it's working out which ones will stick and be in demand, and working out which ones will fade away as we move and come out of this pandemic. But I think every market has its nuance, and clearly work from home, I believe, is something that we'll see well and truly into the future.
All right. And would the desirability of open plan be reduced and desirability of backyards, for example, will increase?
Well, again, it's sort of the horses for courses, isn't it? Not everyone has the luxury of being able to to afford a large backyard, and vice versa. And depends on, you know, obviously more importantly where your work is. But I do think that the remote capability of working from home gives us a lot more flexibility. There's definitely a flight to better lifestyle, and hence regional spaces and locations are starting to get that demand. I also believe that you know, it's about adaptability. So not necessarily moving from an open plan to a closed plan, but having adaptable spaces that are purpose-built or and flexible. So things like the 3rd and 4th bedroom in a large house, you know, how often are these being utilised effectively? Can they be turned into a proper home office environment? Even one of the bedrooms, I've heard, can you turn that into a homeschooling environment? Ability to close the door from children, let them be on their Skype or their Zoom and doing their work in the classroom. So I think we're going to see more of this happening in the short term. And in terms of new design, I think we're going to see some innovation come to the fore. And basically through just good, clever thinking and resolution of the architecture will drive the design. So what does that look like? Well, most of us have hinged doors. In some areas, we might moving back to sliding doors, you know, within cavities. Adaptable walls, for instance, that are not load bearing, that can be reconfigured to open up space or close space. So this sort of smart thinking, I think we'll start to see more of it. And of course, I think the key will be having a place that you can actually work from in your home environment. That will probably be the pinnacle, and everything else will cascade from there.
NERIDA, can I ask you one question on the state of economy and the changes that we are witnessing? So what do you expect will be the impact on growth corridors, especially considering that the growing rate of unemployment, drop in immigration number, and shift in established areas? So the area here we are looking at, say, for example, Glen, Beverly, or Mount Beverly. So those areas in Melbourne.
Yeah. Okay. So I guess one thing we have seen is that house and land demand has remained pretty strong through the pandemic. And there's probably 2 main reasons for this. The first is that we are continuing to see very high rates of first home buyer inquiry levels. And the reason being, as I mentioned before, there's a lot available to them that, you know, from a banking perspective, they're seen as a relatively safe option. You know, there's lots of incentives. There's more recently home builder. So home builder did lead to a massive increase in inquiry on our site. So I think it jumped in one day, it jumped 7 times the level compared to the previous week. So, you know, it did lead to this massive increase in activity. When we have a look at the types of projects that are seeing high inquiry at the moment, they are overwhelmingly house and land projects. They're, you know, at the moment they're primarily in Sydney. So there's one project called Akuna that's in northwest Sydney that's seeing the highest level inquiry. In Melbourne, it's fairly evenly spread northwest, southeast amongst the growth corridors, and pretty much being backed by that first home buyer activity, but also by the that home builder scheme as well. For apartments, you know, it is a big issue. I think one of the things we can see when we look at search activity and we look at the types of properties that people find really appealing, it's always a big home on a big block. And it was like that prior to COVID, that when you have a look at what people want overwhelmingly when they're searching, it's 4 bed, 2 bath, 2 car, big blocks, you know, 600 square meters to 700 square meters. But, you know, I think prior to COVID, people were making adjustments based on, you know, if I am in Melbourne and I want that big home on a big block, you know, I'm probably going to have to go quite far out to maintain affordability. If I want to go inner, then I look at an apartment or a townhouse, and people make a lot of adjustments in terms of you know, what they're looking for and you know, what they can handle. I think what this has done though has it's because it's changed the way that a lot of people are working. I think what we've started to see is that people no longer have to make that decision. They can live on the urban fringe. They don't necessarily need to be in the office every day. At the most extreme, people are moving to regional areas that aren't even within commuting distance from a CBD. But I think what will probably happen is we will see that regional shift continue, but the people that move to places like Byron Bay and Bangalore are probably people that have been in their careers a long time, don't really feel the need to be in the office all the time. I think the younger generations will be the ones that really feel like for their careers, they need to, you know, they like that interaction with other people. They feel like it helps their career. So I think they'll be the ones that more likely move to places like Geelong and Wollongong and kind of do a bit of a hybrid model where they sometimes work in the city and they sometimes don't work in the city. So I think, you know, that COVID has, you know, a lot of what's happening is just a continuation of trend, but you know, what it seems to have done is just accelerated things far more quickly than they otherwise would have occurred.
Right, okay. There's a question from one of the participants. I haven't seen this report, but I'll pose this question to you. There is a report today from Reserve Bank, which warns that house prices could fall 40% as COVID-19 smashes the economy and causes a surge in unemployment. Obviously, if this happens, the outcome will be disastrous. Do you think that this will happen? Will the federal government leave this to happen? If not, what policies are left with the government to avoid this?
Yeah, I mean, I can answer that. You know, I suppose when you see these 40% numbers, you're kind of like, well, what are you talking about? Are you talking about capital city declines? Are you talking about apartments? Is it localized? You know, there's a lot of questions that I you know, it raises when I see these headlines of a 40% decline. The reality is that even though we've got this terrible situation with rising unemployment, we're not seeing a massive drop in pricing at a capital city level as yet, primarily because the banking system is really supporting homeowners. So at this stage, you know, if you're a mortgage holder and you're struggling to make payments, banks are working with you to help you try and get through this. And what we can see in terms of listings is that mortgagee sales are incredibly low. Like we've got, so every, you know, on any given day, we've got 160,000 plus listings on our site. There's only 5 listings nationally that are mortgagee sales. So, you know, at this stage, the banking system does seem to be supporting people through this. There's 2 risks. The first one is that the banks decide to withdraw support, which I don't think they will wholesale withdraw support. They don't need to at this stage. They're still really well capitalised. The second is that the economic contraction leads to a collapse of the financial system. And that could lead to a 40% decline if the finance system collapses, for sure. You know, we could see this situation occurring. But, you know, even though I don't think a 40% decline is likely across the board, as I mentioned earlier, there are parts of the housing market that, you know, we can see rising distress, and we can see that, you know, there's big upticks in rental listings and there's a lot of people wanting to sell. And, you know, in those markets, they're the ones that are most vulnerable at the moment and will probably be hit most in terms of price declines. Right.
As you rightly said, that this is not a financial crisis. This is more of an economic slowdown or downturn, whatever we call it. Banks have been considered in deferring the loan repayment. Do you think this can continue for a very, if it happens for 1 more quarter, 2 more quarters? What are the implications of housing market on financial market or financial market on housing market? And do you think that it's not going to convert into a financial crisis?
Yeah, I mean, I hope it doesn't convert into a financial crisis. And look, at this stage, it doesn't look like it is, but, you know, I think there's only so far banks can go in terms of supporting people. And, you know, I find the bank forecasts quite interesting for housing, because obviously the banks are supporting the housing market. So they're saying 10 to 15% decline. I mean, is that reflective of their own policies? You know, I don't think so, but, you know, perhaps that is. So, you know, I think, you know, banks will be supportive up to a point. They have just come through a Royal Commission, which I actually think it's lucky we did have that Financial Services Royal Commission coming into this, because it did clean up a lot of the banking system. And, you know, I think that's a big positive going into a recession, that the banking system's been cleaned up. So, yeah, so I think fundamentally, you know, hopefully the banks can support as many people through this as possible. If it does morph into a financial crisis, you know, it will be morphing into a financial crisis globally. And, you know, Australian banks are in good shape going into this, which go to Italy or, you know, some other parts of the world where the banking system was already incredibly weak, and, you know, this sort of crisis can, you know, rapidly lead to some pretty dramatic situations for them. So, you know, at this stage, I hope it doesn't, certainly hope it doesn't go into a financial crisis.
Absolutely. Paul, there is a question coming in. What do you think are the top 5 things buyers will be looking for in off-the-plan apartment market in the post-COVID market?
Yeah, there's always those looking to be savvy in their choice and potential investment in the off-plan or what is emerging off-plan apartments. Look, the fundamentals haven't changed, and key to the fundamentals, and Mark can probably, you know, provide a bit more weight here, is, you know, location is probably the first critical piece, and determining the surrounding lifestyle and infrastructure and amenity that's on offer, and seeing whether or not that fits your criteria. I think that's the first driver. The second is maintaining. Depends whether, of course, you're going to live there or whether it's an investment, of course. But key, if you are going to live there, is you know, can that be sustaining your lifestyle, and can you be self-sufficient, and can you feel safe and have a good quality of life? But I think outside these, in terms of the apartment tangibles, people want you know, good spaces. They want fresh air. They want good light. They fundamentally want typically a European appliance. They want, I guess, good storage. So these fundamentals haven't shifted. They've just become more focused, and at the same time, they're trying to understand, you know, how their lifestyle's been impacted, and or what paradigm shifts have taken place, you know, in COVID and post-COVID that will continue. So will people feel safe using shared amenity, for instance? And we know that shared amenity is going to have to change at some level to maintain some social distance, probably. But whilst having that social distance, we all, I guess, crave that social engagement and interaction. And when you live in an apartment building, more so than a house, you're living in a vertical community, and people really want that ability to engage with their neighbours, which typically hasn't been the case. It's been more prevalent in suburbs with detached and attached housing versus density in apartment living, typically in the city. But yeah, good quality design, the ability to get fresh air by opening up I guess a window and or out to a balcony space. Usable balconies, you know, we've seen some things in the past where they haven't been so usable, and the ability to, I guess, conduct your lifestyle. So now with work from home, it's got to have a space that can be adapted for an office environment. Outside that, look, as I said, the fundamentals I don't think have shifted. People in the off-the-plan space have always been looking for good quality, good design, and afforded by walking outside your front door with good infrastructure, location, and amenity on offer.
Right. Okay. And do you think that there have been any impact on property settlements, and if in response to that, developers have been recalibrating their supply decisions?
Yeah. Look, this is a top question I'm always asked, and clearly in times of crisis and impact, property settlements have an elevated risk, and that's no different from COVID, from a GFC, and from I guess a cycle downturn in industry. You know, it's all predicated by, I guess, some good planning, because you tend to know when your property is going to complete, especially in the high density apartment space. You try to get a forward look on what the market may be doing at that point in time, and you try to start working with your customers to put them in a state of readiness, so they're able to complete and settle that property. NERIDA touched on the fact that, you know, at the moment, look, banks, you know, we're in a pretty healthy credit environment space, albeit they're probably tightening up their criteria. And I guess the key at the moment is the fact that, look, borders are closed, which logistically makes it very difficult in terms of timing and process to settle a property. And no doubt there is a large number of offshore or overseas investors, and they're locked out. So again, it does create a few more challenges and hurdles. But overall, look, you know, as I said, there's an elevated risk. You know, developers are doing their best to work with their financiers and look for alternative, I guess, lending solutions, and be able to plan and work with their customers to I guess, achieve a settlement. And albeit it might be protracted, it might be delayed, but nevertheless, to try to work through that incumbent risk.
All right, thank you very much. Mark, there's a question for you. Is there an expected permanent demand shift from inner city medium rise typologies towards less density in the suburb post-COVID? Has there been demand shifting from the high density to the low density suburbs?
And I think NERIDA touched on this earlier, and you've seen some of that happen already. And in London, I was talking to my dad the other day, who's worked in the property industry there for 40 odd years, but he said that, you know, prime prices and rents had dipped by 10%, and, you know, those within a commutable, nice environment had increased by the same amount. So you see that in the short term. I think what we need to think about is nothing is ever black and white and absolute, and big relative shifts don't always mean that the world completely turns on its head. You know, the drivers of demand and value that were there before COVID will be there after COVID. But I think the water does definitely get muddied in the meantime, and there will be some things that inevitably change. But what we've got to remember is we're in an eternal cycle of renewal and change. And, you know, just look at how those sort of inner intensified areas have been performing in the last decade, and even longer. That stems from industrial change. And we're going through an industrial change right now that will, you know, take many far-reaching consequences. So there will be change, but I don't actually think that the extent of change will be as great as people are predicting in this moment in time, because what we need to do is have a conversation with the target customers more deeply, not just now, but in a year's time or 2 years' time, and seeing where we are then, to really understand how long people's memories are and how much of their behavior shifts.
Nice to see you very optimistic still in this environment.
Realistic.
Yes. You've been following build to rent for quite a while. And has the border closure impacted on the premium BTR products? And do you think that the shift will be more towards affordable BTR instead of premium products as a result of limited skilled migration?
I think there won't necessarily be a shift as such. I think you'll still continue to get the focus of those early movers targeting the mid market, which is the deepest part of the market. You know, that middle part of the demand curve, if you like, that can afford to pay more rent in exchange for better service or security. So I think that will continue to be a major focus for the early movers in build to rent. what I'm expecting is greater attention from the broader community, whether that's government, the development community, the community housing sector, in understanding build to rent as a medium to deliver on the affordable housing objectives. Because there's a couple of things that spring to mind. A lot of people will be forced to move at different points along the housing spectrum from the circumstances they're in now and the circumstances they'll be in the coming 18 months or so. Pushing people in every direction creates opportunities all the way along that spectrum, and feeding supply at any point on that helps the entire spectrum. But given what we have seen from the need to promote housing development to keep the supply pipeline coming, the political will to promote social and affordable housing in these times, boosting the economy and achieving some social objectives in return, I can see interest coming from players that would ordinarily have been focusing on the mid-market or higher end, or perhaps entertaining more joint venture activity in that market. So I think definitely we'll see greater focus in that way.
All right, okay, thank you, Mark. NERIDA, there is a question, and probably somebody is looking for a specific advice. The question is, maybe I will make it much more broader later, but first I will read this, that if somebody has to buy a 3-bedroom, which will be a better place to buy, whether regional Victoria or an apartment in Melbourne, regional Victoria, a house in regional Victoria or an apartment in Melbourne. Or the general question probably would be, where are the opportunities for capital growth? Are they in regional Victoria or in the Melbourne CBD or Melbourne City?
Okay, so I'm not a financial advisor, so I will give you that disclaimer before I go any further. I guess, I think when looking to buy property, there's just so many issues involved. I guess the first one is whether you're going in as an owner-occupier or as an investor. Ballarat as an owner-occupier right now, given that we seem to be going in and out of lockdowns, is probably a nicer environment because you get a bigger home on a bigger block and you get a lot more space. Then as an investor, there is a consideration that, the best time to invest is when, people are trying to get out and you can get a bargain and, you're buying at the bottom of the cycle. That's a general, I guess, investment paradigm that people will often use. So, at the moment, there are a lot of people wanting to get out of Melbourne CBD apartments. The reason being is that they can't get tenants, or they've lost a tenant, or, they've lost rental return. And as a result, there's a lot of distress in the market, so people are trying to get out. In terms of whether it would be worth buying one, it does depend on your attitude to risk. And personally, I have confidence that the Melbourne CBD will get back to a great state eventually. I think that people will come back into work and the CBD will recover. I think what Mark was saying is spot on, that life goes on and people transact, and there is a continuation. And I think at the moment with Melbourne stuck in lockdown, everything seems quite bleak, but once it comes out, then things will gradually improve. So in terms of an investment, I think, if you think foreign students will come back, if you believe that we'll get a vaccine, if you think population growth will return to normal levels, I think a Melbourne CBD apartment would be a good option because you'd probably get a pretty decent price at the moment. If your view is more around continued problems with COVID, if you think the future of work is distributed throughout Australia, it's primarily work from home. If you're a little bit nervous about population growth and what's going to happen to migration, I think then Ballarat would probably be a bit better option. But yeah, I mean, there is a lot to think about. And the other one to think about, obviously, too, is getting finance at the moment. That I think if you're looking to get finance to buy something in Ballarat, you probably have better luck than getting finance to buy in Melbourne CBD at the moment. So, that's probably another consideration.
Right. Yeah. Another question is that is the international capital still coming into the housing market?
No. I mean, we can't tell exactly, but we can see, and Paul will probably be able to talk about this from Lendlease's perspective. We can see that Chinese search activity isn't returning on our site. It just hasn't returned for a long time. It hasn't returned since about 2018. So, you know, there's not much happening, you know, not much interest in Australian property coming out of China. But there is a lot coming out of Hong Kong. So what we've seen is pretty much since June last year is this rapid acceleration in buyer interest in Australian property coming from Hong Kong. The price points are quite high. You know, it's quite different. When we see property seekers from pretty much anywhere in the world, price points are generally below 750, often below 650,000. When we look at Hong Kong property seekers, they're 1 million plus. So, you know, they are looking at higher end values. The other thing though that we are hearing anecdotally is that there's a lot of expat activity. So we can't tell who's searching on our site, but when we're talking to agents in premium suburbs of every capital city, that they are saying that they are speaking to a lot of people that are quite keen to return to Australia. So, you know, Australia is, you know, we're getting through relatively well in terms of infection rates, and parts of our economy are doing quite well, even though we're in the middle of a pandemic. So, you know, I think there's a recognition that, you know, potentially Australia will be a relatively safe place for the next few years relative to other parts of the world.
Yeah. Do you think that the measures that government and the Reserve Bank is taking at the moment would have an impact on the property values in long term?
Yeah, I mean, you can't pump so much money into the economy and not expect, you know, some asset classes to do well. And at the moment, you know, we can see tech stocks are doing really well. You know, tech is a sector of the economy that is seen as not COVID proof, but, you know, it is a, you know, take Zoom, for example. You know, no one really heard of Zoom, but now suddenly everyone's on it. So makes it a very good investment. Certainly for our company, you know, a digital real estate company, you know, our share price is at record levels. Gold is at record levels. So, you know, that there's this massive amount of money flowing into gold at the moment. And that's helping WA. It's also helping smaller regional cities like Orange do quite well because they have significant gold mining nearby. For property though, which I mentioned before, it is all about premium at the moment in terms of what people seem, you know, what seems to be holding up. That, you know, a $4 million home in Turak is not rapidly losing value, or go to Byron Bay and we're still seeing many of those, you know, multi-million-dollar properties continuing to hold up. So there's a definite flight to quality across all asset classes, and residential real estate is no exception.
Right. Okay. Thank you very much. Paul, can I ask you on the planning and regulation, how is it going to respond to the crisis? Do you think that any new norms or regulations coming your way?
There's been a couple of phrases or I guess concepts or terms come out of it. One that resonates is the concept of shovel ready. There's been, I guess, some mandates typically driven by each of the states to focus on what they call shovel-ready projects or developments. Look, the overriding driver of this is to create economic activity that underpins jobs and income flow and spending, so we can keep the economy going. That's critical, and I think with the pandemic and its fallout, we've seen this to be more so, because you can't really deep freeze every part of the economy. If you do, you know, it has massive impact. So the concept of shovel ready, look, there's been a lot of advocacy and certainly industry body weighing in on what's the key drivers and how to accelerate, I guess, what has always been delayed approvals and the mechanisms behind that. So if anything, the good that will come, it will be the fact that we'll find a way to get through what many consider to be quite bureaucratic, quite lengthy and delayed, and of course quite costly. And how do we maintain our standards, which Australia is very much known for, and but how do we at the same time accelerate? So finding the balance of bringing approvals forward, getting in a state of readiness, and being able to actually move forward with the economic activity that construction brings. And I note in the state of Victoria, look, that's been happening and certainly is at the fore at the moment. And there's a lot of works underway and about to start, and future work coming on. So it's not only about what you're doing right now, it's also about what's going to occur in the near distant future. And then, of course, building what we call a healthy pipeline of future activity that will just continue to underpin growth. Because again, this is all about getting people back to work, getting the economy moving, and getting, getting out of this. No one wants to stay in this any longer than they have to.
There's a bit of echo, so I'm waiting for it to become quiet. Yes. Okay. So have there been impact on construction cost, given that global supply chains have been impacted and labor has also been in a lockdown situation?
Yeah, it's a good question. Look, having conversation with colleagues in the last couple of days, the crisis definitely unhinged the supply chains. It made us rethink very quickly as to where the pain points were. This country, like most outside the Asian basin, has been very reliant on imports for delivery and service, and also the ability to produce. And again, those pain points were pretty much addressed by most in the first phase of the lockdown. It's, I guess, thrown up a debate about local manufacturing, which, I still believe is a very important part of our psyche. And a lot of that's been taken away with globalisation. So I think we may see a move back to some level of innovation and local manufacturing, which I think would be a good thing. And certainly there will be probably government support to provide that incentive. But needless to say, we have to compete not just on a local level, we have to compete on a global level. Therefore, supply chains do become constricted. Take, for example, the concept of face masks and creating a stockpile that's essential for the country. And at some point early on in the pandemic, we saw a shortage of face masks, hand sanitizer. But if you saw how we responded as a nation, there was a pivot by producers of alcohol who then pivoted into making hand sanitizer, which just shows the resilience and the capability and the speed at which we can respond. So hence that's why I'm quite optimistic about manufacturing in certain parts returning and being less reliant on those overseas imports. I also note too that that's just part of the supply chain. The workforce is obviously a big component of supply chain, and there's still considered to be workforce shortages in the construction industry, and it's going to be really important to, I guess, identify and work into the future with the generations. So we've got to remember too that if you're a Gen X like me, you're probably coming to the apex of your career. If you're a baby boomer or a builder, you're in that retirement phase. And if you're, leaving university, you're probably, moving into the workforce as a Gen Y and then a Gen Z. So these generational shifts, we have to think about arming and skilling the future workforce. And I guess making our industries attractive, because that's what drives industry. And certainly there's a lot of framework being put around that and being redeveloped and updated at a government and advocacy level to ensure that we don't have these shortages in workforce, that we do have the focus and we do have the ability to continue to build, because this country has been reliant ever since colonialisation in terms of population. I mean, we need population to drive growth. And I think what we've seen out of this pandemic is the fact that when you close borders and you have no net flow of population, both international and domestic, has a massive effect on social impacts, financial and other.
Thank you very much, Mark. Paul, can I go to Mark and ask some of the challenges that he sees in terms of the BTR as a long-term solution for rental?
Sure. Yeah, I think it's one we need to address pretty quickly, because the pre-COVID model was that the growth of our cities needed more rental accommodation. 3/4 of people moving to Australia were renting at first, so certainly on the East Coast anyway. So assuming that dynamic does come back to some extent, we need to be ready to address that. And at the same time, the shifts that are happening in COVID and as a result of it will likely swell the rental market further. As if you think about the scale of the millennial cohort being a major driver of the rental market, they've been disproportionately impacted economically by the current circumstances, and will continue to accelerate and drive the changes that were happening already. So structurally, the savings rates are challenged for home ownership. More flexible employment options are likely to continue to be a reality. So it's going to drive, I think, people's willingness to explore different forms of the concept of ownership, even if they don't necessarily own the unit outright. So I can see a case for it, whether the population growth from overseas migration continues, or whether it's a domestic improvement in service offering. The challenges at the moment, I suppose, are we need some of the first movers to be a success, because a lot of reluctance from super funds or even overseas in capital to invest is, well, what's the investment case against other land uses? At the moment, a lot of the other release valves from other land uses are equally challenged. It's not like one sector of inner city property is rock and roll right now. They're all facing similar challenges. So the first thing to prove is, what is the depth of market, and what is a customer willing to pay for the service in response. The second is, in other countries where it has taken off, especially the UK more recently, there's been political will and assistance to act as a catalyst to get this going. So some of the challenges mentioned before were around the managed investment trust, which penalised overseas investment, in particular in housing, as compared to commercial assets. So levelling the playing field there will obviously help promote build-to-rent activity. Land tax, in its most recent form, a lot of build-to-rent developments will pay a higher land tax contribution than a build-to-sell development. So some levelling out of that could help. And we're already seeing people come to the party, and I think recognising that construction multiplier there is in housing, recognising the need to keep the pipeline going even when the demand side is more challenged, is relying on that political will and private market to mobilise and deliver it. So there's no easy way to deliver housing in a downturn, but that's the most logical focal point, I think, for authorities, for developers. And if you think about it, it actually helps enable the recovery. Labour mobility is key in good times and bad. And as the economy recovers in our cities, people will need to move around to access those. And having a plentiful supply of good quality, well-managed, community-focused housing is key to that.
Thank you, Mark. We have already exceeded time, but maybe I'll take two questions. The first one is for the panel. Maybe NERIDA, I'll pose this question to you. Are there any macroeconomic, regulatory, and industry reform that you consider might be necessary to assist the recovery?
Yeah, look, I think it's all about just getting people back to work as quickly as possible. I think you can try and focus policy in many ways, but fundamentally, until we all go back to work, the economy's not going to move forward. In terms of property, I think the two big issues, or the most immediate issue, is getting foreign students back, and I think that does impact property, but also obviously the education sector as well, which is really important. And then longer term migration, as Paul said, our economy is built on migration and any massive slowdown to it is going to have huge impacts on a wide variety of things and not just housing. So I think they're the two that do need to be considered. I don't think we need any more cheap money. You know, I think there's enough money sloshing around. We don't need more money being pumped into the system. You know, I think this is, again, coming back to the fact that we're not in a financial crisis. There's no shortage of money. What we are short of is the ability to work properly and to travel easily.
Yeah, I'd add to that too, just on a sort of social level. We need people to start feeling optimistic about their future, and it's hard when you're in it. Like you know, Victoria, we're in a state of 6-week lockdown, and you know, you can't help but dwell on, I guess, the things that are in front of you, which are not so positive. But we need people to look over the horizon and be more positive and optimistic. Things do change, and I guess the government is very focused on accelerating that, and looking at everything it can do to underpin the confidence both in business and consumer, to get the wheels of the economy turning, so we can get people back to jobs and start producing again. And I think that's important, and trying to get people's state of mind, so we can start to feel more optimistic and less uncertain. I guess, you know, you've sort of got to take it by the horns and probably say, I've had enough of this, and try to make a positive choice. And no doubt it's not easy. It's fraught with difficulty and challenge, but I know in my household and cohort of friends, we're all trying our best to make a positive choice and do what we can, knowing that it's not ideal conditions, and be supportive of each other and community, and understand too that these times don't happen that regularly. Hopefully they don't continue to happen that regularly, and the ability for everything to slow down so we can actually get a sense of what's really happening in our world. So if you take a sort of peep up into the bigger picture, I think one thing that has come out of this is that the environment has had an ability to take a breath, and we've seen some amazing photos and footage of just pollution clearing and animals returning, and just the ecosystems that we're suppressed through, I guess, you know, global movement and activity. So, you know, they're the things that we, I guess, can smell the roses and look for ways to adapt and change to make sure that we have a sustainable world in the future, not only for us, but our you know, our children and our children's children.
Thank you very much, Paul. Mark, would you like to add?
That was so beautiful, Paul.
Thanks, Mark.
I'd just say at a selfish level, just reopen childcare, and then. No, I think Paul's right, and NERIDA too. Expectation and confidence is everything. So having a clear roadmap is probably it. You know, how we will deal with things under different pathways. That's what people want to be hearing at the moment. Otherwise, it's any friction there is in the system from a regulatory or financial perspective. Just whatever can be done. It's going to be a can-do, must-do mindset across the entire spectrum.
Thank you very much. Last words from you on the immediate and medium-term outlook for the housing market. What do you think?
I'll try to lead if I can, just jump on it. Look, the short-term and most immediate, the greenfields market is absolutely doing exceptionally well based on the home builder grant, and it's clear that in times of crisis, stimulus creates activity, and it's definitely created activity in that market. That market has got, I guess, a massive uptick in demand, and it's a question of whether or not you've got the land to be able to underpin the eligibility, because there are certain rules around that. So, but we've seen, you know, certainly that come to the fore, and we're playing into that opportunity and helping people secure, I guess, their new home and their new future, which is absolutely positive. On the other part of this, you know, in the apartment market, look, we were coming into a recovery. We're hitting a peak supply event in Victoria, and of course all that does now with the pandemic is protract that and delay that. So it makes it more exacerbated since the borders have been closed both on a domestic and international level. So that's got some way to travel. However, because of that, a lot of developers haven't brought forward supply and commencements. So that's going to have an effect further down the track, because that's going to probably, I guess, support prices at their current levels, if not, not much impact. And then of course we're going to see it restart back again in the cycle. So I would say, in summary, very optimistic about the future. The current stimulus works. We're expecting and hopeful to see something that is a bit more akin or focused to the apartment sector, very similar like a home builder grant here in Victoria, which we think again will stimulate further activity. And then obviously from a stimulus perspective, we then need the ability for the borders to open so we can get back to the natural population inflows that support the overall economic activity. So I'm an optimist, and I think the future of property is what they say as safe as houses, and I'm still sticking by that fundamental.
Thank you very much, Paul. NERIDA?
Okay, so I agree with Paul. The house and land is doing incredibly well at the moment. Premium property is doing really well. Regional areas are really doing well. Big problems with apartments at the moment. It does need some help. Investors aren't active, which isn't a problem now because there's not much rental demand, but will be a problem in a couple of years' time. Again, I'm an optimist, and eventually borders will open again. Eventually we'll travel again. Eventually we'll either get a vaccine or some way of managing COVID, which makes it less scary, and then Australia's economy will really kickstart again. So I think we can see that what has happened to places when they get out of lockdown, they do rebound very quickly, and we may even be in a situation that we get out of lockdown, we've pumped so much money into the economy that the rebound turns into this, it starts to move too fast and we start to see inflation. So, I don't think we're there yet, but, there is potentially risk that the economy will overheat once we find some solution to these infections.
Thank you very much. Final words from you, Mark.
I honestly think that all the changes that are happening at the moment will drive a more diversified housing response. So I think we will get improvements in design, improvements in management, and we'll get a more blended tenure offer, which will actually carry through all economic cycles and be to the benefit of future generations. So let's use the opportunity to plug that gap with investment where it's required, and take the opportunity in front of us.
Thank you very much. Thanks for concluding on a positive and optimistic note. I would like to thank all the three panelists today for an excellent and very engaging discussion on housing markets in Australia. And also thanks to all the participants who have joined us today. We will be putting this recording on MSD channel, so you can listen to that even later. And thank you very much for joining us today. Have a good afternoon.
Thanks very much.
That's it.